Good, thanks, Ash. Let everyone go ahead and trickle in for a moment. All right, well, aloha, everybody, and welcome, friends and farmers. As always, we are so happy to see you all here tonight. So before we get started, I have a quick question for you. Go ahead and drop a 1 in the chat, or if you're on camera, you can just raise your hand. I want to know how many of you are current HFUU members. Awesome. Thank you all so much for your participation. And so, for those of you that aren't and are newer to this community, Hawaii Farmers Union really exists to help to strengthen and support local agriculture across the islands, not just through advocacy, but through education, technical support, and community connections. And as you know, the cool thing is you don't have to be a farmer to be involved. If you care about local farming and agriculture, this is really the community for you. All right, so for those of you that don't know me, my name is Maile Woodhall, and I serve as the Organic Technical Support Specialist through the USDA Transition to Organic Partnership Program, also referred to as TOPS through HFUU and CCOF. Now, through TOPS, we provide completely free technical support to producers statewide. That can include anything from certification compliance, record keeping services, grant help, and pathway program support. We also offer a mentorship program where producers are eligible for a $500 stipend to participate on our one-on-one mentorship. So if you're interested in any of these programs, I'll be sure to drop my information in the chat. Please feel free to reach out to me. All right, so tonight's topic is one that is incredibly important, and understanding financing is one of the most important aspects here in Hawaii for our small producers. But before we dive into it, a little bit of housekeeping. So now during the presentation, we just want to encourage you all to go ahead and drop your questions in the chat throughout the presentation. And then at the end, we'll go ahead and do a Q&A session. And also, if you have any questions related to organic certification or any of our technical support, don't be shy. Go ahead and include those as well. All right, so tonight we are very lucky to be joined by Eric Bowman, a loan officer with Feed the Hungry. Eric, thank you so much for being here tonight, and the floor is yours.
Thank you, Maile. I appreciate the introduction. And aloha, mai kakou. I'm going to share my screen here very quickly. As I do have a small presentation that I could probably keep busy for 20 to 30 minutes, but I am hoping that folks are going to have some questions. So I would encourage you to go ahead and put it in the chat. I'll keep an eye on it. And if it's small, I'll potentially respond to it during the presentation. But as Maile said, I think we're going to have hopefully a robust Q&A when we're done. So after our hour together, I'm hoping that you understand what lenders are looking for, how to prepare to engage with the lender, and really how to strengthen your request if you're seeking a loan. We are talking financing, which does involve the purchase and sale of land, which I think is a little bit of a fraught topic in Hawaii. So I just wanted to have a comment here on Hawaii, that Hawaii is an indigenous space, and it was been shaped by generations of Native Hawaiians, and that the kingdom was yielded under distress, and colonization is kind of this ongoing process. And I think the very least we could do is sort of honor our relationship to the land that sustains us and our livelihoods, and sort of understand our relationship to that and these islands that we live on. Part of that, I think, is understanding that Aina isn't simply land, this asset, even though that's how finance looks at it, but is that Aina is that which feeds, and that with Aina comes a responsibility. And I work with a lot of small farmers. I think many of them take that responsibility seriously. So I would ask you, just in the chat, what's your place? Maybe give me a quick comment, like where you're located. Personally, I am located, why I spaced out on that, west of Hilo on Hawaii Island. Just also a little bit of personal introduction. I come to Hawaii from originally the Virginia Piedmont region after a couple decades in the Pacific Northwest. And I've been working with Hawaii agriculture for about 15 years. Those are my grandparents. They lost the farm during the Great Depression, and my family would probably still be in the Virginia Piedmont had not that happened. So that, that connection or lack of it to land and Aina really shapes our existence. I've worked with food and ag, not just in Hawaii, but for about 20 years. A lot of that has been around supporting various different co-ops, underserved markets, places that are seeking capital. Here's a couple of pictures of me in El Salvador with a co-op of cashew growers, and there on the right-hand side is a group of mobile home park owners who we helped purchase their mobile home park. So really the theme of my profession has been money and then markets where there are challenged to get access to it. So, as Maile mentioned, I'm a loan officer with Feed the Hunger Fund. So that means that businesses come to me seeking money, and I kind of take a look at their financial situation, and I'm balancing their ability to repay it with the business's need for the capital. And then I make a recommendation to a loan committee. There's a couple of our borrowers. There's Mickey with Mother Nature's Miracle there on the right-hand side, and that is Calais and Brandon with Hamakua Coast Premium. They have this MacNut syrup, ube syrup that they use for cocktails, tiki. They're both bartenders, but then also cooking. Those are a couple of the borrowers that we've worked with. So we're a little bit different than other lenders. We take a very high touch servicing is what we call it, where I'm in touch with the borrowers for the life of the loan. I frequently we're working with them to coach them through business planning, financial modeling, budgeting, if they're facing a challenge. A lot of times I'll network them with other lenders, like if we're not a good solution for them, and I'll assist them with their application very closely. A lot of the people coming to me maybe never applied for debt before, maybe they need English language translation, maybe they don't really have a business plan. So we spend a lot of time sort of rolling up our sleeves and helping our borrowers get what they need to move forward. Just a quick comment, you don't have to pay a lot of attention to the names and faces here, but this is Feed the Hunger Fund. The reason I share this is just like we're a team. I got a portfolio manager, a CEO, a CFO. So it's not just me, but an entire support network for you and your loan. Where do we get the money that we lend out? We work closely with a couple of different US government agencies like the US Treasury, as a CDFI, which means Community Development Financial Institution. We have a pot of money from KS to lend to their tenants, which I know is probably relevant to Maile and her colleagues down there in South Kona. There's a lot of homesteads down there, coffee farms and the like. We also get money from some private family foundations, the state, Hawaii Pacific Health, just a variety of different places. We work with a variety of different lenders. We will get referrals from American Savings Bank, First Hawaiian Bank, Central Pacific Bank. They'll look at a small business and they're like, geez, this is, I like to say that the banks are the fair, I'm not a golfer, forgive me. The banks are the fairway, we're in the rough. So we're just kind of right off to the side of where a lot of the traditional lenders are. So we keep a relationship with them. And if they come across an applicant that they think, gosh, this doesn't quite fit our box, but we still think it's credit worthy, they might refer it to us. We work in a similar fashion with a few of the credit unions. We've done some co-lending with OHA, a lot of work with American Ag Credit and the Farm Service Agency, probably our two biggest agricultural lenders here in Hawaii. So if you're farmers, you know that ag takes just a ton of labor and a ton of capital. And a lot of times this is coming from as an intergenerational asset. Families will farm the same piece of property for generations, century. And many times it's a generation coming on board, leaving their fingerprint, advancing whatever the model is. I'm working with a couple right now who are, I don't know, they're maybe a little younger than me, 30s, 40s, and they're taking over the MacNut farm. The father's getting a little older. They have had some jobs like landscaping and bartending, and now they're ready to really focus their energies on the farm as their primary source of income. But these are, the trees they're farming are 60 years old. They were planted by people they will probably never meet. So a lot of times this is an asset that's been cultivated over time. And also, income can take years. Take those MacNut trees, right? They were planted 60 years ago. They might not have had a productive year for 3 or 4 years until the income came online. It's seasonal. less so mac nuts, but maybe ulu coffee, for example, are both very seasonal. Can be impacted by weather events, as anybody who survived the recent Kona low can attest to. Is very sensitive to inflation, which would include fertilizer, feed, um, inputs, that kind of stuff. Oh, looks like we're getting some great comments here. Thank you. So ag needs capital. Farmers need to purchase land. They need to build housing for themselves or their workers, their manager. And there's, the term capital expenditure is for anything that's going to be used over the course of a long period of time. A barn, a solar panel, a well, fencing, any irrigation, all that is infrastructure. And then there's working capital. One of the things that farmers know is oftentimes they're spending money just months before they're going to get paid. This is kind of a fancy word, the cash conversion cycle, but the idea is that a farmer might have, let's say, a big pile of cash, and then they're going to take that cash and they're going to put it into fertilizer and pesticides. Let's say the coffee, fertilizer, pesticide, um, what labor to do the pruning, the clipping, the picking. Then they're going to take those cherries. They're going to spend money to process them somehow. Then they're going to dry them. Maybe I'm just going to pretend here. Send them off to a roaster. Every single one of these steps costs money, right? Then they get their coffee back in little bags and they send it out to a grocery store like Locavore, and then it's going to sit on the shelf, and they might not get paid from Locavore for a month. So let's say they took $10,000, turned it into $50,000 of coffee inventory, and then they turn that $50,000 of coffee inventory into an accounts receivable that they would get money back from the grocery store, and then a period of time is going to lapse. Then they're going to come to getting that money back. So that liquidity that it takes to sort of manage that cycle is a lot of what our lending takes place. Somebody has a good question. There's a couple good questions come in, and I'm going to address some of these later. But the first one is, do we do credit report checks? The answer is yes. We can pull that, or you can provide it. We look at a variety of different factors that I'll get into more detail in a minute. But we put a little bit of weight into what's happening, but not very much. Somebody says, do we consider outside household income when reviewing applications? The answer to that question is yes, we do. That makes us a little different than the Farm Service Agency. The Farm Service Agent, the USDA FSA, needs the farm to pay for the loan. So we can look at off-farm income, whatever's happening at a household level. A lot of times farms are very complicated. Maybe there's an Airbnb, they host weddings, they have farm tours, a spouse has a county job to get the health insurance. So usually there's a variety of sources of revenue that keep the farm going. Ooh, there's some really good questions coming in. I'm gonna pause some of those for a minute to keep going. But this is good because I don't have enough to keep us busy for this whole time period. So I'm glad that these questions are trickling in. So I'm going to give you a quick scenario on an equipment loan. So a new BCS tractor is going to cost about $7,000. It's probably more now. It's been a little bit since I put this together. So to get a $10,000 loan for 5 years, that would be, let's say, about $200 a month. And that does a couple things. One, it takes the expense of the tractor and spreads it out over the useful life, which is maybe 5 years, maybe 15 years if you take care of it and don't use it as much. I'm really speculating how long a BCS tractor lasts. But the point is, rather than outlaying $10,000 right now, you can outlay our money or the USDA's or somebody else's to buy that tractor and then spend $200 over the useful life of the equipment. And sort of the dynamics here is how long would it take a farmer to save up $10,000 to buy that tractor? How much labor could be, if they could buy that tractor today instead of in 3 years when they could save that money, how much labor could be saved in that period of time? Would it make the farm more profitable during that period? I love these questions that are coming in. I'm watching them and I'm going to respond to them here in just a couple minutes. Please keep them coming. The Feed the Hunger Fund, Maile may remember this. When we worked together at the Kohala Center, there was the hub for Kiva. TKC is no longer doing that. We are. So Kiva can be a great way to get your credit muscles sort of stretched. It is zero interest, zero fees. There's no collateral, 6 months, no payments. It uses a thing called social underwriting. So if you have bad credit, it can be a good solution, and it loans up to 15,000. There's Sierra Lynn, who is a kalo farmer on Kauai, and a couple other kalo farmers there in the lower corner, Ho'opili on Maui, both of which were some of the original Kiva borrowers. So what do we do at Feed the Hunger Fund? We're focused on food and ag. About half our borrowers are farmers, and of the other half, almost all of them are in some degree a food truck, meat processing, delivery, food hub, this restaurant, retail, something that involves food or ag. We have maybe a single-digit percent of our lending that is totally unrelated to food and agriculture. For example, we work with a physical therapist on Molokai who was struggling to get credit, a call center on Maui, a light manufacturer on Oahu. Our loans are less than $250,000, although we have done some much larger loans than that, depending on a situation. We can bring in other partners or just depends on what's going on. And our rates tend to be 5.5 to 6.5%, and the loans are capped at 7 years. And really, what defines us is that we're taking risks other lenders cannot. And in fact, a lot of our sources of capital require an applicant to have been turned down elsewhere. So a lot of times, people are coming to me after they've struggled elsewhere. That is Kahea and Bubba down in Waipio Valley. They have a poi mill in Honoka'a, and you might recognize their brand, Mokuvai Pico Poi, or Poi is it? Um, Costco and KTA and a few places around the islands. Some of the recent sectors that we've lent to was an apiarist, a beekeeper, poultry producers, mushroom growers, flower growers, veggie growers, coffee growers, just a wide range of some of the agricultural sectors. If you're on Maui, you might recognize Petaluma Floral there up in Kula. So just quickly by the numbers, we have lent about 17 million since 2010, and just this year we've already lent 1.3 million. We're now lending about 5 million a year. So I think the lesson there is we've really ramped up sort of the lending that we've been doing. Our average loan size is 80,000, 90,000. So these are generally like smaller loans. And interestingly, I ran these borrower demographics and they basically changed zero in the last 3 years. So most of our borrowers are women, and most of our borrowers are minorities, and we lend to, let's see, a disproportionate number of Hawaiians. So what's in a loan package? I think this is a question that kind of stumbles people because it can feel very overwhelming. At minimum, we need 3 years of tax returns, year-to-date P&L, a balance sheet, which a lot of times people don't have, so I can help them kind of figure that out, and 3 months of bank statements. And if people haven't been filing taxes, let's say they're young, or maybe the business didn't exist, then maybe we won't need tax returns, but we do need 3 years personal and professional. I'm sorry, business. And a lot of times that's just one tax return. Like for a farmer, that would be their normal 1040 and a Schedule F. And anything that contributes to your financial picture. So somebody asked about off-farm income. We would, prove that income. If you have a unit that you lease out, have a lease agreement. If a spouse has a job with the county or wherever, we'll need some pay stubs. Household budget. So a lot of times people never fill this out, and we have a form to fill out, so it's not as intimidating as maybe it sounds. And then the credit report. That was a question earlier. A lot of times we're not focused totally on the score. The main thing, and I'll talk about this more in a minute, the main thing we're looking at is, can the loan get repaid? Does it cash flow? And we work with people whose credit scores are in the 500s. A lot of our borrowers are in the 600s. So usually we're seeing things that are messy. A lot of small business owners are low income and they have very messy financial pictures. We're very adept and accustomed to sort of really rolling up our sleeves and trying to figure out just what's going on. And then the loan request, like how much money do you need? What's it for? That picture there is of Real Havoc, a sport fisherman that we helped. He was actually located on Oahu. He purchased the boat and the slip and relocated to the small boat harbor in Kailua Kona. And that was a good example, actually. I don't want to get into too much confidential detail, but he got a loan from a bank, and the bank would only lend him 75%. And then he had the other money to pay for the slip and the boat. And a lot of times the slip is worth more than the boat. And but then they were broke. Like they had no money for fuel and marketing, and just all the kind of stuff that goes back to that cash cycle that I was describing. Like businesses just suck up cash in order to be able to make more money. So we helped with that working capital. I'm going fast. I feel like I'm going too fast here. So feel free to interrupt me, Miley, and I'll probably dig into some of these questions here.
You're doing a great job, and we're loving the content. Such great insight. Thanks, Eric.
Awesome, excellent. And I did give you the slide deck, and so I would encourage you to share it to folks who came if they want to. So Byron asks, what are the biggest factors lender look for when evaluating a land-based or agricultural project that is still in early development? For us, that is going to be cash flow. Is there revenue to support the household? And is there revenue to support the farm operation? And I'll dig into the cash flow in a second here. I'm gonna hold off on the rest of those questions because they're good ones. So if you start a loan application with me, I will put you into our loan application portal. We deployed this third-party software, and I was like, oh my God, I'm going to hate it. We still have PDFs that people can print out and write on and fill out, but we started working with basically, this is like a subscription, we pay for it or whatever. We started working with LenderFit, and I'm just getting great feedback because it just walks people through all the steps of what they need to need to apply. So you'll get a little email from me, you click accept, and then you get basically your own little portal. And you'll just go in, you'll just fill, I just made this to myself, that's why my name's on it. But you'll just go in and fill out your name and your job title, and then you go to the next section and where's your business address? You're just kind of answering questions, almost like a survey, and maybe upload documents. We've worked with people who don't have very good English language skills, and they seem to be able to navigate it fine. Generally, I would say 95% of our applicants really appreciate the structure of this loan application that's online. Maybe about 5% get a little frustrated, like, can I just email you? I'm like, of course, just send it directly to me. That's great. And if people don't like filling stuff out, then they can, like I say, I can send them a PDF and they can print it, sign it, scan it. Sometimes that scanning is just them taking photos with their phone. So this gets to some of Byron's and probably other people's questions. What are we evaluating? I mean, there's something called the 5 C's of credit, 3 C's of credit, depending on who you ask. But really, we're looking at the ability of the business to repay us. So that's cash flow. And we also look at how much experience do they have? What is their credit history? And what's their character like? Like a character flaw might be they are lying to us, which does happen. People say, no, there's nothing wrong. And then you pull the credit report. There's tons of stuff wrong. Why don't you tell me there's something wrong? Like if you can't be upfront with me about this, why aren't you, what else is going on? Then it arouses suspicion. And then collateral. We're not a collateral-based lender, but we do look at it. We do file a UCC, which is called a Universal Commercial Code, which is a lien against, like if you purchase a tractor, we would file a lien with the state that says we have a lien against it. Just kind of like when you buy an automobile. I would say the main hurdle to getting for us to approve a loan is their cash flow. So if a loan payment is going to be, I'm going to keep math real simple, $1,000, then we're going to want to see that the household and the business is going to be kicking out at least an extra $1,000 a month plus some, so probably 1,200. And if we can achieve that, usually we can work with any other situation. So to Byron's question about the biggest factors to look at when evaluating really any project, it's going to be cash flow. And that's going to say, can the loan be repaid? And there's some, we can get creative. For example, we've worked with ranchers who maybe aren't going to have a cash event for 18 months. So maybe maybe we'll do like 18 months of interest only payments, and then there'll be like a literally a $30,000 payment due in a year and a half, which is when they anticipate the sale of their cattle. So, uh, if there's, but that takes, a track record, history, experience, and us kind of being able to understand, like, oh, they're really going to be able to do. Oh, I'm answering all of Byron's questions, and looks like he just just is joining us again. Um, Somebody asks, what are financial documents that are absolutely essential versus nice to have? Tax returns are essential. Tax compliance is very important to us because we're frequently lending out government money. And for any lender, a tax return becomes gospel. It's you're essentially signing your tax return saying almost under threat of almost perjury that this is correct. So even if people will come to me and they will start telling me about all the cash sales they do, and I'm like, not only do I not want to know about it, in fact, it's not even, not only is this not helping your case, it's actually hurting it. Like I have to just go on what's in the tax return. I mean, I kind of understand farmers and small business owners, so it's never surprises me. But the I would say that the most critical document is the tax return. And sometimes the showstopper on that would be, I mean, I've had people say, I don't believe in the authority of the US government. I don't want to legitimize it. I completely respect that and I understand, but we can't do alone. Or maybe in another case, somebody had sold a large piece of property and they couldn't deal with the capital gains. So they were kind of frustrated with just what do I do? So they stopped filing a couple years ago. Also, we can't work with that. If somebody is like filing an extension and they're a little late, that's pretty typical also for small business owners. Kaylee asks, would poor credit disqualify? And so we look at 12 different criteria, and poor credit does not disqualify, but we need to understand what's going on. So a lot of times it's death, disease, divorce. There's been some event in somebody's life that have kind of knocked them off the rails. And if it just looks isolated and we sort of understand it and we can respond to that in our loan committee meeting, then we definitely can work with that situation. If it was a situation where, trying to think of an example, some life event happened, right? Like a weather event, or maybe, excuse me, a truck broke down and they stopped paying a bill for a few months to repair it because there wasn't a lot of cash flow. We do see that kind of stuff. And we can work in pretty messy situations, and I'll get to this in a minute. We do require there to be like some form of payment plan in place with whatever delinquent accounts are out there. And it it I've also seen situations where people's lives are just like consistently, habitually out of control for decades. And sometimes I hate to say this, but it's just like income. If like people could, like, I get it. I've been low income. I work with people that are low income, and year after year after year, never having enough money to make ends meet. It just problems add up. You don't fix the tires, there's a blowout, then you don't just need new tires, you need new tires and new wheels. There's stuff like that that accumulates when a farm operation or household just doesn't have enough money. So some of these questions are getting at how could you strengthen a loan application? The number one thing I could say is simply just get your house in order, file your taxes, have financial statements. And I've worked on loans where I'm getting a financial statement handwritten in a spiral bound notebook in Korean. Like that's a financial statement. You're like, here's the money I've made. Here's what I'm spending my money on. Like that counts as a financial statement. Ideally, somebody is pulling a report from QuickBooks. My heart always jumps with glee when I see a QuickBooks report. I'm like, great, they have like a baseline of sort of bookkeeping and accounting, reporting all the income. That's very common for a farmer to make a couple $100 at a farmer's market, gas up their truck on the way home, and then sort of do that every weekend. Well, that doesn't really help me understand what is being spent on the farm and how much money is the farm making. So reporting that income really helps me justify that it's a business and not a hobby, and that it gives me a complete picture that I can trust. Working with a bookkeeper, I realize most small farms don't have the luxury or even the margin or maybe enough sales. It's easy if you're making $1 million a year to peel off a little bit of money and pay it to a bookkeeper. But if you're only bringing in $50,000 a year uh, through coffee revenue or whatever, then usually there isn't enough room to get a bookkeeper. But it does make my job easy. Separate business and personal finances. Frequently see small businesses where they're covering a portion of the owners. I mean, I've never not seen a business that wasn't covering part of the owners. But the more sort of clean it can be, the easier it is for me. And I mean, I hate to say this, loan officers are like a little lazy. There's like stuff coming at us all the time. So to be able to just kind of really understand what we're looking at without having to do a whole forensic project, which I mean, I spent 5 hours today working on one forensic project for a farm we've worked with for years. So none of these are showstoppers, but definitely if you're trying to like present it as best as possible. And a lot of times I'll say people will reach out to me years before they're ready. I love that. I love getting to know somebody, sort of understanding where they're at, understanding like, hey, I did the thing I said I was going to do 6 months ago. I'm ready now. Awesome, let's do it. So I would say you don't need to feel all squeaky clean before you reach out to me. In fact, I would encourage you to reach out to me sooner rather than later. But the applications that I see that are the strongest, they do tend to have basically just cleaner financials so I can understand what's going on. A couple of other tips to strengthen. Just come ready to have a conversation. Understand what's going on in your credit report. As I mentioned a minute ago, have payment plans for delinquent debt, especially if it's back taxes. We worked with a small business that literally didn't understand that general excise tax was a thing that existed. And then when they found out, they owed like 20 grand and they had to reach out to the state and negotiate basically, I'll just send you this much money a month. And so, sure, that's back taxes, that's a delinquent account, but they did what they needed to do. They talked to the I guess that would be the creditor at that point in time, and yeah, and they were making good. Okay, that's like zero problem for us. Be specific about your loan use. If somebody says, "Oh, I think I need 75,000," that's a little different than saying I need 75,000. 10 is going to go to a shipping container. 10 is going to go to my new driveway. I need to buy a Kubota. That's 20, and I need 20, another 15 to just have cash on hand, so on and so forth. So just having an idea about what you're going to spend the loan on also comes across well when you're interacting with the lender. And we ask for a business plan, but a lot of times that business plan is me interviewing somebody for like an hour or two and like taking notes. I've sent people like a template, like just like little like 10 to 15 questions, like what's your plan? And a plan can be as simple as um, trying to think of a real simple one. Uh, okay, I have Mac nuts. I'm selling a wholesale. I'm just inventing something here, right? I need 15,000 to get a cracker. So then I'll be able to sell them at the farmer's market. And if I do that, my income will go from whatever dollar a pound to $3, whatever, 20 bucks. I don't know. I can't remember right now what a shucked, a cracked Mac nut costs. But that's a plan, right? The plan is I need to buy this equipment, I'm going to make more money. So just the more you understand that, the more like I will believe you when you tell me that this is going to be good for your operation. And there's a very cynical saying about lenders that they'll give you an umbrella when it's sunny out, and then when it's raining, they're going to ask for it back. So, when people come to us and it's in a crisis, the options are more limited than when they come to us in advance and uh, when things are maybe not as urgent or as dire. And I will also talk to farmers and they're like, I hate credit, or, I don't like debt. I hate borrowing money. And then I look and they owe the state $10,000. They're overdrawn on their credit card. They are back on, they owe a supplier the 5,000. And I'm like, you have a bunch of lenders. You just didn't get their permission first. You're behind on your rent. That means your landlord is now your lender. And that's not something they ever wanted to sign on for. Kaylee asks, would a loan go towards farm-related equipment such as fridges for a food hub? The answer is yes. We love lending to food hubs and we love lending to farm equipment. I'm going to go back to some of Byron's questions because I saw he joined back on. He asks, are there projects that prioritize Native Hawaiian or Ohana-based land projects? Like I would say generally, there's some very targeted specific projects. Like OHA has two different loan products that are targeted specifically to Native Hawaiians. Um, and I'm a little confused by the Ohana-based land projects. Like I think that would be like farming in general with a family, almost like as a hui. Definitely see that. Um, Most lenders aren't, what am I trying to say? Can't prioritize a minority group or whatever. That might be preferential treatment. But just in general, I would say we love our Hawaiian borrowers. We work closely with them. I try really hard to meet people where they're at, whatever their situation might be. There are a couple of Native Hawaiian, I mentioned that term CDFI, Community Development Financial Institution. There are specifically Native CDFIs. Hawaii First will do home loans, lot land loans. They're in Hilo and Waimea. I volunteer with them. They're a great credit union. They used to be called the Center for Native Hawaiian Advancement. Now I think they're the Hawaiian Council. Maybe they're the Council for Native Hawaiian Advancement. So the Hawaiian Council or CNH, I'm sorry, too many letters and words. The Hawaiian Council is also a native CDFI. So they're focused specifically, I think they'll lend to anybody, but they're probably prioritizing Hawaiian borrowers. Hopefully that gets to your question. And he had another good question here. How do lenders view projects focused on food sustainability or cultural land stewardship rather than a high profit commercial model? That's a good one. I mean, at the end of the day, any lender is going to want their money back. And if we lend money to somebody and we don't get it back, that means we can't lend it to somebody else. That means people where we get our money might not trust us to give us more money if it looks like we're making a bunch of bad loans. And so I've rarely I mean I've just to be frank, I've never worked with a high profit commercial model in agriculture. I know they're out there, but a lot of times, our agricultural sector is so challenged for all the reasons. It's expensive. We're far from markets. We don't have labor. The markets are small. Uh, so, I would say the traditional bank lenders do have you use the word conservative. It's not like political. They're risk averse. They're under even more strain. If you look at a bank, there's this whole chain of responsibility. So the borrower is responsible to the lender or the bank. The bank is going to be responsible to investors. The investors have their priorities. So, a lot of lenders aren't lending. It's not like, here, just give it back if you want. It's like they're in the middle of this relationship between investors and the borrower. So that kind of limits the risk they can take to a certain extent. So, I would say we view projects on food sustainability and cultural land stewardship as our mission. That's why we do what we do. I would say we're our core is looking for those projects, and we don't really focus on high profit commercial models, but we do basically just want to make sure that the business, to whatever that means, is can reasonably pay us back. In lending, it's almost viewed as unethical to give somebody money that they can't pay back, because then what are you going to do? Take their tractor, take their land, go into a collection cycle? Like nobody wants that. So here's a bonus tip. All lenders need the same thing. Any lender that you reach out to is probably going to need 3 years of tax returns, 3 months of bank statements, a budget, household budget, etc. So just start a file either in Google Drive or your desktop or somewhere. So that way, when you reach out to me or whoever, you're like, oh, cut, paste, email. It's just right there. Um, oh, I should have mentioned. Just go back. I'm just going to go back one. That's Jeremiah Blackhat down there in South Kona. He's got a pretty cool aquaponic and vegetable gets this hillside, it's like terraced. He's got all these different beds. He feeds some of the restaurants around Kailua Kona. And in fact, before this started, we were just talking about Matt and Andy. They're Farmers Union um, members down in what's it, Wood Valley, down in Kailua. That's their poultry poultry operation there. So just talking about a couple of examples of some of the loans that we have done recently. The Musubi truck on Kauai, they had two truck locations and they got a lease to put in a brick and mortar restaurant, basically, like kind of a small brick and mortar restaurant. And they needed some money to do capital improvements, put in maybe like a exhaust fan, furnitures, fixtures, and equipment. They had to buy basically stoves and ovens and that kind of stuff that would go into a restaurant and working capital. And they had a little bit of debt. So that would be an example of where there's this like existing operation, they're looking to expand, and we help them with a loan to kind of take that next step. Freedform Hawaii, that's Amanda. She's a wood carver down on Ali'i Drive. She opened up a little location there, kind of near Kona Inn, across the street. And she needed working capital and to basically, it's called TI or tenant improvements. She was leasing a spot for her storefront and just needed to purchase a little bit more equipment. She does these like what you call it, like carvings, and that she's like a contract with the National Park Service. So if you go to Volcano Park, you'll see her wood carvings too. Bunlai on Kauai. There's a network of Thai growers on Kauai, and we helped him buy a tractor. And we worked a little better for him than some of the other lenders because we would. He actually wanted to buy it at auction from the continent and then have it shipped. He didn't like the options that he was seeing locally. Very strong farmer, very solid operation. So we lent him the money without having the tractor basically identified yet. If that makes sense. Keep an eye on some of these questions here. So we're getting ready to, before we jump into the Q&A, because I love all these questions that are coming in. I guess the key points that I would want to leave you with is that financing can support any stage of the farm operation, whether you're buying land or you need equipment or you're getting ready to expand. That's a tool, really nothing more. I think people put a lot of moral judgment, like it's a failure to need a loan. I think it isn't a stretch to say that many of us have been traumatized by money. Money has been a colonial tool also. It can be very damaging. A tool can tear down a house or it can build a house. Um, and to look around at what your options are. There's a small network of agricultural lenders. They all have a little bit of a different box that you may or may not be well suited to fit in. So, one person's no might be another person's yes. And really, it's a relationship and to treat it as such. I mean, the point is, me and the other agricultural lenders that I know, like we do this work because we care about the success of farmers. There's a lot of things we could do with our life, but this is what we care about: is working with farmers and small business owners. That is Wesley there. He's got Sundog Bakery in Kailua Kona. Very successful sourdough operation. And that's our CEO, Patty, sitting there happily holding a loaf of one of his breads. So the bottom line is that QR code is my phone number and stuff. Reach out if you think you're like ready to raise money. You just want to know what the options are. A lot of people I love it when people just call me and they're like confused. Like, when should I reach out to you? What should I do? How do I get started? Really just feel free to, if you think you might be wanting to raise some money in the next year or so, just schedule a call with me. Sometimes I'm booked out a little bit, but I'll be more than willing to spend half an hour with you, look at your situation, just talk through what you got happening. So maybe with that, how do I stop sharing? There it is. Why don't we address some of these questions that are coming in?
First of all, thank you. That was really incredible. We love the firsthand experience, kind of hearing that. And those photos are great. So many of those farmers and producers are members of HFUU. So great that you're able to highlight them. So yeah, as Eric shared, we're going to go ahead and get into Q&A. So we're just going to encourage you all to go ahead and drop any additional questions that you have in the comments here, and we can go ahead and go through them. I know Eric's kind of gone through quite a bit of them, but we can kind of pick up where you left off. I'll let you go ahead and do that.
Awesome, Miley. Byron's just coming in with a whole range of awesome questions here. He asks, we've already invested personally into restoring the land and recently applied for the NOI COCUA grant. What's the best way to show that kind of commitment and momentum to a lender? So, you know, I mean, I feel like in a way I'm maybe reiterating myself, but I would just document all those expenses. And my experience is most farmers don't have a big tax bill because they're maybe they're marginal. They're not. There's frequently a large depreciation expense for the land or the assets like a barn. So a lot of times, I was just looking at a farm's tax return today. They had income of like 5,000 and a $90,000 depreciation expense. So even when farms are like cash flowing positively, a lot of times there's not a tax bill because of the depreciation. And that level of like basic business administration says this to professionals. I mean, I know this isn't, I'm sure it's not a hobby for you, but you know that the term hobby is like almost like a legal IRS thing. Like if you're not making money, it must be a hobby. So to document those expenses and have that level of sort of accounting says this is a business. I'm taking it seriously. I want to generate money from it in the foreseeable future. Michelle asks, do you ever lend to farmers on lease land that has a month-to-month lease? That is a good question. Um, Let me think about this just for a second. Land tenure becomes important. Um, I would say the answer to that question is yes. Like for a bigger loan, we don't do mortgage lending. Well, we do. We rarely do mortgage lending. I was actually having this conversation with Maile last week. We will very occasionally do a mortgage loan. We do work with a lot of farmers who are on leased land. I think it's going to depend on their total picture. I'm thinking of an example. Maybe a farmer needs a tractor that's not getting tied into the land. They have like several, is the land HDOA? Is it a sublease? Is it documented? Is it verbal? Um, I see a lot of weird landlord tenant stuff. People think they're safe and secure, and then something changes with the landowner, and suddenly they're not. So, we would want to kind of take a look at the situation. So I guess the answer is it depends. I know that's not a great answer, Michelle, but it's not a no.
That was great. Thank you.
Awesome. Gretchen or Gigi says, we have used our own money to start up our farm and coffee stand. Then we had a fire that, oh, I'm so sorry to hear that. We had a fire that burned down our ag structure and 100 square feet storage unit. Would your organization help us rebuild the barn? Absolutely. I would say that's um, definitely the kind of loan that we would do. Um, Depending on when it was, there may be insurance. Sometimes the FSA has some programs available.
There's no insurance.
Okay,
Yeah, it was off grid, so
right.
Kula couldn't get there, and everything went in 1 hour.
Oh, this was the Lahaina fires.
No, it wasn't. It was out in Calpo, separate completely.
Oh, I just meant there was just that same event or whatever, that same storm. Okay,
Nope.
got it. Got it.
No, it was afterwards. Ours was in February of
Got it.
2024.
That's really disappointing. But definitely, that would be, I'd be happy to work with a
Okay.
farmer in that kind of situation.
Okay.
Michelle had another question that says, what do you mean raise money? Is that investors? I guess I think you're referring to when I was talking about kind of banks and how they approach lending. And I was just, it sounds corny to say, but everybody gets their money from somewhere. And most lenders are lending other people's money. So banks do have investors who they have to repay. we receive, we borrow money, which then we have to repay to our lenders. We also get grants that are just loan capital. We've had some, it's called EDA, Economic Development Authority or Administration. So we'll get a grant, has to go to an area for a reason because of a disaster. And then once it's repaid, then we can lend it out in a different way. So it kind of gives more loose in terms of the criteria. But typically, I was kind of mentioning that just to say that sometimes lenders have their own pressures that they're operating under. It was in reference to I think Byron's question. What if there's any questions that I missed here? But geez, we're coming up on the hour. Oh, thanks, Michelle, for the thumbs up.
Okay, I do have a question. What
Yeah.
advice would you give to producers who have previously been denied by other lenders? I know we kind of took a deeper dive into that in our past conversation, but maybe you could share a little insight on it.
Well, I'd say give me a call because I would say the vast majority of our borrowers were denied by somebody else. And sometimes they'll even come to me and I'm like, you need to go get denied so that way I can lend to you. It would depend on why they were denied. Um, you know, sometimes I would say I see denials all the time. And sometimes I see a denial and I'm looking at the applicant and I'm like, they're great. Why did they get this denial? Other times I'll see an applicant who has a denial and I'm like, yeah, we can do this, but I definitely can see why they can't. And then other times I'll see somebody and I'm like, they are really in trouble and they don't even really understand how bad it is yet. Um, Usually when are, we don't issue a lot of denials. In my experience, people almost self-select out. Just those more, I would say, outlier situations, like I was saying with the tax returns. They're like, hey, can I get a loan? I'm like, send me tax returns. They're like, well, I don't have them. I'm like, well, you need them. And then they kind of go away on their own. I mean, I'm being a little glib about that, but well, what's going on? Do you need a
Mhm.
CPA? What's happening? Do you have any tax returns? Um,
Bye.
so usually when we do an actual denial, we have like, I would say most lenders try and provide like a reason. So a lot of times these sound so painful. It says like an adverse action letter is how I think one of the banks calls their denials. And usually they'll list out a bunch of reasons like credit, there's not enough cash on hand, you haven't been in business long enough, credit score is too low, all those things we can work with, but they can't.
All right, great. And now I also know that you were very receptive and open to having people to have that conversation early with you. Is there anything they can do to prepare, or is there things that they have to have? I just know a lot of people are nervous to talk to lenders early on because they think that you are going to be pulling credit and they have to have all their taxes just to have that conversation. So I'm hoping you can just reassure everybody like what that initial conversation would look like and how you can support them early on.
No, that's a great question, Miley. The more you have, the easier it is. I always tell people like, send me what you got before we talk. And most times it's like nothing. And we don't pull credit without people's permission. We can, in fact, it's about halfway through the loan application process. The one that I shared from LetterFit is there's a form, like an authorization form that we have to collect before we pull credit. Um, you can, by the way, pull your own credit. Credit Karma's is pretty good. You get like a score and understand what's going on. There is like a free annualcreditreport.com. I can't remember if that's the right URL, but the government like arm wrestled the credit bureaus to give you access. And during the pandemic, you could do it like monthly. So you can pull your own credit. If you have questions on it, like, hey, I don't understand what this is, I could take a look at it and we could talk about it together. Um, like I was saying, there is a lot of, I think, emotion and shame about credit, and people feel like it means like whether they're a good person or a bad person. It really doesn't. I think there's a lot of messed up stuff about credit. Credit scores are racist, for example. Like there's like these impacts that people don't any control over can impact their score. So many lenders have just stopped looking at credit score for that reason because it is a little bit of a flawed metric. I'm going off into a little bit of a rant here. I got to get back on track. To your question, like, what do they need to do to prepare? Um, like I said, I really just want to meet people where they're at, and if it's like really, really, really premature, we'll talk and I'll tell them what they need to think about. And, oh, hey, oh, you don't have you want to be a farmer. I've had some great conversations with people who are like years away from even starting their farm operation. And then I'll see them at an event. They're like, we're almost there, Eric. And I'm like, awesome. High five. Keep up the good work. I hope what's coming across is I just try to be accessible and available to help people kind of navigate that realm. There, you know, sometimes a lot of times people, I think you do work in real estate. So sometimes people are like, I need to make an offer right now. I need a letter. I need an approval letter, and that's like very urgent. Um, it's kind of a situation. Uh, we have issued, we're not like a mortgage lender in the traditional sense, so we can't do. I mean, we can provide a letter that's kind of like a pre-qualification, but um, you and I know those are kind of meaningless. But the point being that sometimes people have like something like right now, like I need to buy this piece of equipment yesterday to keep my farm going. Um, and we definitely can work with people. We try to move quickly. We've been really busy this year, both with demand and then we've just a couple dozen people that are dealing with pretty unfortunate situations because they've gone to low. So I've been almost swamped with trying to respond to how we can make accommodations for folks because they lost a lot in the storm. Um, but in general, I try to make time in my schedule just to talk story with people. I feel like in order to do one loan, I need to start two applications and talk to 10 farmers. So 90% of the people I talk to don't get a loan. I don't know if that helps at all.
Yeah, we get that. And we appreciate your service and everything you're doing for our producers. I think a big takeaway here is that this is really like an incredible resource for our producers, for people that traditionally are denied from loan programs or can't find other fundings. This is really like a great resource. So thanks so much for sharing. Looks like we do have one more question here just in the comments. So we'll go through this. For Gigi, she was saying that we need to wait to rebuild until 2027. She just wants to know if the program will still be robust. I think meaning will it still be available for producers by then?
Yeah, we've been around for 17 years now, and we've only been growing. And I think as a lender, I like to think of it that we manage risk and we manage timelines, time. So we got no plans to go anywhere. Um, this year was, any organization that was a little bit connected to the government, this has been a weird year, a little bit turbulent, but we're here, we're safe, we're secure, and I would look forward to talking to Gigi in 2027.
Great. Anybody have any additional questions? Give it a moment.
Well, I do really, as we're waiting, I just really appreciate the invitation to be here, Miley. Before we started, I was telling you guys just how much I appreciate everything the Farmers Union does. People in Hawaii are really fortunate to have such a dynamic. Don't we have like? Do we still have like the fastest growing farmers union in the country? Even we have just sort of a very unique.
We do. We're at about 950 members. We're really close to 1,000 statewide. So it's
Awesome.
really awesome. Yeah.
Congratulations.
Awesome. Well, it doesn't look like we have any additional questions, and we're just about top of the hour here. So I'll go ahead and, well, first of all, Ashley, you have anything to share before I wrap us up?
Nope. Such a great presentation.
Okay, awesome. Well, just mahalo again for everybody for being here tonight and spending time with us. I know you all have busy lives and a lot to do in your farm, so just appreciate you taking the time. Yeah, we just, this is such an important conversation, and we just really appreciate HFUU and all the wonderful pathway programs that we're able to support. And so we just want to remind you, we do have an additional webinar at the end of the month. It'll be on the 27th. We'll have our keynote speaker from the Real Organic Project. So I hope I can see you all there. And just again, a huge thank you to Eric, our keynote speaker, and also to Ashley and everybody for participating tonight. We really appreciate you all. So yeah, thanks for being here and have a wonderful evening, everybody.